In today's video, we're going to learn how you can trade pullbacks. So traders employ a variety of tools in order to conduct a detailed market analysis. A trend line is one of those tools. Okay, so the incline on a sequential sequence of candlesticks is indicated by the line drawn on the chart. The trend line may serve as a foundation for a trading strategy, and in today's video, that's what we're going to look at today, which is how you can trade pullbacks. But before I can begin talking about pullbacks, let me first talk about the first important thing, which is trend lines. So a trend line is a line that connects price lows and highs. If the price makes a low, then a high, and then a higher low, you can join the lows to build a trend line that shows the price's upward trajectory. So the price will produce a high, a low, and then a lower high during a downtrend. By linking the highs, you get a trend line. Yeah, so how do you trade the trend lines? Well, the trend line can be used to determine the optimum points to open your trading position. You must wait until the candle touches the trend line for the third time before proceeding. During an uptrend, buy when the trend line is touched by a candle for the third time, and sell when the trend line is touched by a candle for the fourth time. So consider the illustration on the screen. The first situation depicts an upward tendency. The first and second points will assist you in drawing the trend line. The third point is where the purchase position should be opened. In the second instance, the downtrend is illustrated similarly. The first and second points are utilized to identify a trend line. When the candle touches the line in the point referred to as number 1, open a sell position. Look for more candlestick patterns like the engulfing candle or the wicked candle to confirm your trade. So here is the first strategy, which is a pullback strategy for long trades. So take a look at the example in the chart on the screen. Okay, so you can observe the lowest point. The price then begins to rise, eventually creating a higher low. A trend line is formed by connecting the lows. Now is the time to wait for a pullback to the trend line. Okay, so check on the pin bar 3. This is an ideal time to enter a long position. So where should you place your stop loss? Well, you should place your stop loss order below the trend line pin bar, and the take profit at the prior high level as the target. So the higher the risk to reward ratio, the better. Okay, and then a pullback strategy for short trades. So use this if you'd like to scalp. Okay, so you should wait for a downtrend to initiate a short trade. So look for the highest point, then the lowest point, and finally the lowest point. The trend line is created by connecting the highs. Your job now is to keep an eye on the chart and wait for the line to pull back. So the bearish engulfing pattern appears on the trend line in the example on the screen. So now this is the best time to enter a trade. So where do you place your stop loss when you open trades for short ones? Okay, so your stop loss should be placed immediately above the engulfing pattern. The take profit level should be set at the previous low. The reward to risk ratio is once again highly favorable. So to conclude, using trend lines to trade pullbacks is the basic method. You'll be able to master it in no time if you follow these few steps. So to begin, draw a trend line on the price chart by linking the lows and highs. After that, look for a retreat to the trend line as well as engulfing pattern or a wicked candle. So set your stop loss and take profit levels. After that, calculate the reward to risk ratio. You want it to be quite high. So this is it about today's video. If you learned something from it, give it a like. For more videos like this, go on and subscribe.